All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Markets off and rolling, pretty much in the same range it was all day yesterday. In fact, this is the S&P futures chart for the last 24 hours, and you can see this kind of 31.96 and 32.02. So we're trading in about a 6 point range for the last 24 hours. That is incredibly flat, and flatter than what we will typically see in flat periods. Will we break out of it? Probably. But there just hasn't been a lot of overall market movement now for quite some time. If you take a look, I backed this out. You can see what this week has looked like. This week has been about a 10 point range the entire week. And 10 points isn't exactly a whole lot when the market's sitting where it is. That's been the case here this week. And we've had some stocks make moves, right? We've had Netflix make moves. We've had some downside moves on a few things, but most things pretty much kind of locked in their trading ranges here. So about 3,200 on futures. We did see President Trump got impeached, right? I know that's all over the news and everything. It's just not something the market's reacting to. As the market doesn't believe it's actually going to happen, since the vote and debate has to now move to the Senate, and the Senate is more Republican controlled. When you look at the House vote that occurred, not a single Republican broke ranks, so no one's expecting any senators to break ranks, and So anyway, the Washington political scene continues, but the market's not really reacting to it, could something happen where ultimately the market has to react? Yeah, something could happen, but as it sits, nothing, nothing major for the markets there. As far as the challenge goes, still have GLD. I do have to close it here today. The stock is still green. The option's still red. This has just been a stock that's just been stuck at 139 since we got in. Just absolutely stuck. And not a whole lot of fun when that happens, but gonna hold it right now, and we'll see kind of how it plays out into the close, and I'll have to most likely take it. There are no new challenge signals on the board right now. Verizon has a downside crossover on it, and then on the upside, we have no longer. So it's blank. There are no upside 3-7 crossovers right now. We'll see kind of how that plays out. But Verizon, here coming off of a little bit of a short-term high, is not going to give any sort of signal here. Okay. All right. Now, yesterday I announced that the challenge, we're going to wrap it up tomorrow. Right, and we're going to start a new challenge on the 2nd of January. I announced what we'd be doing in the meantime, and all of that's going to be on the message feed later here today, and you can check that out, and it'll be posted each day so that you're aware during this holiday season. Now, I am kind of shutting this challenge down about 30 days earlier than most challenges are going to run. Right, and that's not anything that goes against the challenge methodology or anything here. But with this challenge, just kind of, you've heard me describe this particular challenge as just off rhythm. Just using that word, because that's kind of how it just has felt the entire challenge, just off rhythm, right? Yep, running through the process and everything else, and some are going to go, some aren't, and all that, and the process is what it is. But this was just kind of felt like just a little off rhythm. So I just want to wipe that slate, get back on rhythm, and go. But my off rhythm, comment yesterday sparked an interesting debate about the challenge algorithm and whether the challenge algorithm finds trends. And so I figured this morning I would talk about that and kind of give you a little more insight into the the building of the challenge algorithm and my expectations around the challenge algorithm. And we'll go take a look at each and every trade for this challenge. And we'll go take a look. Do they find trends, right? Do they find trends? When building the challenge algorithm, right? In knowing that it has to be applied in a way where we can trade options, right? Where entries and exits can be consistent, right? And where we're not looking at putting, every trade at 100% risk. Also have to look at it and go, okay, we need something where we can build some easy out targets and identifiable out targets. And putting all that together, a lot of work and a lot of time, a lot of effort, and it's a constant type of thing. That work and effort never goes away, but it is something where it comes down to a few things, right? If we're going to build a challenge algorithm to run this kind of 3,000 to 100,000 challenge, element, it's not good enough to get, hey, you know what, this stock goes up, this stock goes down, right? Because, yeah, fine. We can go buy Verizon right here, and we can go sell it 2 days later, and we're going to make a little bit of money. But by the time we take time decay, implied volatility, commissions, all that into account, are we really making anything? No, we're not, right? We can look at big gaps and go, well, okay, how do we get involved in these? Well, we're playing earnings. Does that make a whole lot of sense, from an option standpoint, challenge standpoint? No, the option values are heavily inflated, and the predictability factor is very low. So to find something where we go, okay, we have a real edge here consistently, no, not very realistic, right? So the first thing when building the challenge algorithm that we had to do is to go and say, can we identify trends? Not identify trends that have already happened. That's easy. That's hindsight. But trends that are about to emerge. And can we do that with a level of predictability or accuracy that, yes, sometimes we're going to be wrong. Sometimes we're going to take a beating. But you know what? When we're right, even just a few times, it'll make up for all those beatings. What indicators do we use? What type of chart dynamics do we use? Do we use some fundamentals? Do we use market conditions? Do we use, also, there's just millions of things we could use. But the bottom line is we have to find trend and a stock starting to emerge into a trend. If we can't find trend, the trading doesn't apply to the challenge, right? We can go and find oscillation, right? Here's triple M. We can go and find, this kind of flat period right here. Identify that. But, to pick the tops and bottoms and tops and all of that, by the time we're in and out of the options and all of that, we're not making enough for it to be really applicable to the challenge. To make money for the challenge, we need serious trends. Now, what we do know is that these trends are, or we tend to see certain price action ahead of these trends, okay? Where we can look and say, hey, this is almost always something that happens before the stock trends. The big thing that we put in, that we use, is the 3-day and the 7-day moving average. Because there is not a single trend that occurs in the market, in any stock, that does not have the beginning at a 3-7 crossover. So here's Netflix on this run. We had the crossover right here. And on that day, it was Monday. I said, man, I really wish this were a challenge signal. But it just didn't trigger. But it did have this 3-7 crossover, right? In every trend that emerges, both upside and downside, has a 3-7 crossover associated to it. So we used that, and we said, okay, we can use this and say, all right, since we know every trend is going to have this, let's start with that. Now let's start filtering down to say, hey, is there a high probability that this crossover emerges into a trend, or is it a little bit of a lower probability? And one of the things that we know is that, hey, when a stock's coming off new lows, like back here in November, that, yeah, the stock can go on a big trend, but oftentimes there's a whipsaw element, right? Right here it came off a new low in December and went on a monster trend. But is that the norm, right? Is that the norm? And the answer is no. That is not the norm. In fact, if we're playing for trends off of highs and lows, there are a lot more whipsaws, right? So, we looked and we narrowed things down, and we, in terms of, price action, probabilities. We looked at past history on each individual stock, and came up with the challenge algorithm. And what's the challenge algorithm meant to do? It's meant to find trend. Okay, and we've nailed it. We find trends, right? We absolutely find trends, and we find trends at a good enough rate to apply to the challenge. Now, since we're adding options, we don't have the luxury of too much patience, right? It's not like we can go out and buy Triple M today and say, hey, we're going to buy it. We have some signs showing that it's about to emerge into a trend, and we'll just hold it until it does. We don't have that luxury, right? With an option, the option value is going to do what each day? Tick down, tick, 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 right? Flat is a killer for options. And if we hold it for 15 days and then it takes a move lower, then that's going to just absolutely wipe out the option. So we need to apply something to it that is going to mitigate our risk and help us to ride the trend as it emerges. But no matter what we apply, what it's going to do is it's going to decrease the probability of riding the trend. So what have we applied? We've applied the ATR method, right? We've talked about this a bunch. And this ATR method works very well for the most part. But like any exit system, stop system, it's going to decrease the probability of riding the trend. And so we have to find something that, hey, is it going to decrease it too much? For the safety factor, is it going to be something that just isn't patient enough, or is it too patient, and all of that. And as we look at the data over a long period of time, this ATR method is what models it the best. And so that's what we run with. But we also know that, hey, with the ATR method, it is going to take out some of the ride trend elements. And, okay, we're okay with that because we know, okay, as we're on them, great, we go. And, yes, sometimes it's just not going to the timing isn't just going to be perfect, and we're going to have a challenge that's kind of stuck in the mud, like this one. And that's never fun. But if we go out and apply something tighter than this ATR method, we start really missing out on trend, and we take the upside away. So does the challenge algorithm find trends? Well, let's do something. And I'm going to take this data, put it on my other screen, and let's just take a look at the chart. Let's go through the trades for the challenge here so far. All right, let's start with Home Depot. And Home Depot, we bought some calls on 926. Okay, 926. And let's take a look. Okay, 926 right here. Okay. Ultimately, we got whipsawed out of Home Depot, right? On this day, down, the ATR method kicked in and, knocked us out. But Home Depot went higher, right? It ultimately went higher. Not by a ton, but ultimately, more than $10 higher from where that entry was. Not a massive trend, but ultimately, was there trend there? Yeah. What about Intel? Intel, we found here on 9/30 was the entry date. And here we go, 9/30, right here. A beautiful signal. Then we had some news that came in for the markets and dropped it for 2 days. But ultimately, did it find trend? Yeah, really did. Were we able to be on it because of the ATR method? Nope. The ATR method popped us out to mitigate the risks. But ultimately, did it find trend? Yeah, big time. What about Walmart? Oops, there we go. My apologies. What about Walmart? This was our next trade. And Walmart we entered on 10/8. Sorry, it's making me adjust here. We found it on 10/8. We got the signal. Trend? Nope. No trend. None. None whatsoever. Just flat. And not a whole lot in it. Just there. So, in terms of finding trend, we're now what? 2 for 3, right? We're 2 for 3. All right, let's take a look at the next stock, Microsoft. Bought this on 10/9. Ultimately, a trend. Yeah, a very nice trend, right? A beautiful trend here on Microsoft. ATR method whipsawed us out right in here as it just wasn't emerging quickly enough. But did it find trend? You betcha. That's 3 out of 4 that found trend. Then we had Micron. Micron, we entered on 10/21. Here we go. Did we find trend? Yeah. In fact, we took a nice gain on it, right? We took a nice gain on it, and then rotated, took some of the exposure off, and then the ATR method kicked us out as it went into this kind of shorter term consolidation. But it did find trend. Yeah, it did. Right. So what are we? 4 for 5, right? Four out of 5 now. So 4 out of 5 of the challenge trades have found trend. All right, let's go to Netflix. 10/28, Netflix. Do we find trend? You betcha. Right? You betcha. Did it pay off tremendously for us? No, unfortunately, no. But, beautiful trend, right? So now, what are we? We're 5 out of 6. All right, let's go take a look at CSX. CSX, we bought on 11/1, right? On the crossover on 11/1. Did it find trend? No, didn't, right? Just didn't. Yeah, we ultimately took a $300 gain on the trade, but you'll notice I'm not defining trend by gain or loss on the trade. Did a real trend emerge afterwards? No. Right? So we're 5 out of 7 now. What about Visa? Let's go take a look. Here's Visa, and the entry date on this was 11/7. Did we find trend? Yeah, you betcha. Right? This thing's just been a nice little upward trend ever since. 6 out of 8. What about FCX? Do we find trend here with FCX? The entry date here was 11/15. Did we find trend? Yeah, it's a beautiful trend, right? Absolutely beautiful trend. 7 out of 9. You'll notice some of these trends aren't straight up. They have, some short-term, whipsaws in them. But 7 out of 9. What about Netflix? We got back into Netflix on 11/21. Right here, did we find trend? You betcha. So now we're 8 out of 10. Pretty good. What about Halliburton? Did we find trend? Yeah, the entry was at 10/21. And yes, it absolutely found trend. 9 out of 11. And then the last trade here, GLD, which we've had now twice, right? We've had one that just didn't trend at all, right? So we're 9 out of 12. And then the one that's currently going, I'm not going to count just simply because it's currently going. And you know what? It's still showing that a trend's about to emerge. So out of the 12 closed trades for this challenge, 9 of them have found significant trend in the stock. What does that tell me? It tells me the algorithm itself is working. That it's doing what the initial principle was designed to do in terms of finding trend. Because if we can't find trend, nothing else matters, right? Nothing else matters. Now, in hindsight, we can say, well, you know what if we just hold things longer and all of that, all that's hindsight, right? And, we could hold things longer. But if we hold things longer, what happens to the risk component? The risk component increases dramatically, right? And so, okay, we have that element of we're finding trend. Am I going to go adjust the algorithm? No, not at all. Not at all. 75% accurate in finding trend? That's fantastic. Now, when I say the challenge has lacked rhythm, right? A lot of that is simply not because it's not finding trend, but because the ATR method is balancing us out in a way where we're not taking advantage of that trend. That is what I refer to. It's something we've seen. It's something we will see again. It is something that is going to be part of the challenge for years to come, where the ATR method is going to balance us out a little bit early before, like a Halliburton, just before it goes on a monster run. Those aren't going to be fun to watch. They're not going to be fun to look back in hindsight at. But to apply the algorithm and this trend methodology to the challenge, we have to have something to mitigate that risk factor, to say, hey, you know what? We know that we find trend more often than not. And so fine, this one's not working right. This one's not working within that ATR range period. Okay, we'll move on. We'll go find the next one. And that is going to stay consistent. And so when I look at the challenge algorithm over the course of the last couple of months, and I say, well, do we need to make a tweak to the algorithm itself? The answer is absolutely not. Absolutely not. And why? Because it is doing its job in terms of finding trend. And in general, we're not seeing anything that we haven't seen before. And we know that, hey, some challenges are simply going to be this way, where we're just slightly off and, struggle to get back on that rhythm. Okay. Now, I've mentioned that, we are making a few changes for the next challenge, right? And the one big change is we're actually going to tighten up the ATR method a little bit. We'll go 5 days without triggering step 1 or 2. Is an auto exit there with it, right? What will that do? That will tighten up or make it less probable to ride some of the trends, right? It'll decrease that. But at the same time, it will increase the rhythm of the challenge, which is what I want to see there. Now we're also going to be making a change to the watch list stocks, and some of the stocks in here, I'm simply going to pull out. Arconic, it just Alcoa, they're just not tradable. When they've signaled, they're simply not tradable. And, with the way the options are, same with Bristol Myers. And so I'm just pulling them. Not going to have them on the list. We'll be substituting them for several others. Exxon will be one that will be on this list. And a few other energy plays will be coming on this list. And also going to be adding a couple gold miners to this list as well. We already have Barrick Gold, GOLD, but going to add a little bit more here to it, just because of what's kind of going on, what's emerging, and I think they're going to offer some very nice opportunity there. But the challenge algorithm does a fantastic job of finding trend. It has since we've launched it, and that element, though, by itself isn't quite enough when we apply the challenge methodology, right? Finding trend is the first part. It's the big part. It's the part that is, if you don't have that base, nothing else matters, right? Imagine if, we have 75% finding trends this challenge, right? Imagine if we were 40% finding trend, 30% finding trend. A challenge would never get off the ground. A challenge would never even stand a chance, right? But at 75%, yeah, we have very good odds. In fact, all we need is about 60%, and we tend to see some strong gains in challenges. This one, a little bit different. And some of that has just been, just the timing of things, like a Halliburton, right? Where it just bumps us out with the ATR method barely, and then boom, flies on up, right? And one trade like this, we have the challenge around 2,000 right now. Had it kept us in, we'd still be in the trade. Not with the initial principal or initial capital, but we'd still be running with it with the trade. We'd be looking at a challenge value somewhere around $4,000 to $5,000 right now, right? And so just one can make a big difference, like that. And we haven't had too many difference makers like that so far this challenge. In fact, our two that we had the trend, we had riding on the trend, Micron and Netflix. Both of those, as we peeled them off, we ended up taking a loss on that kind of additional, as that trend did not continue in the short run. It slowed down and then went on a little bit after that. Okay. So anyway, that's what I wanted to show you here this morning. This kind of basis of finding trends, and that is something that the algorithm continues to do. It continues to do very well, and we're going to continue to run with the same process and the consistency of the process, and carry that into next year, and expecting a big year here from it, knowing that about 20% of the time we're going to have a challenge like this, and hoping those odds stay that way, and that we kind of hit the 20% on the other side where we're up in those massive gains, and we're definitely in position to be able to do that going into the new year. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.